Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, stocks on Wall Street overnight had a nice bounce back from the declines we've seen in recent sessions. Still some anxiety, of course, about what we might hear from Fed Chair Jerome Powell at Jackson Hole this Friday, but based on Thursday's session, investors don't seem to be expecting any major change. What's the story in the global markets on this Friday?
Yes, if you look at the U.S. market, it rose quite sharply yesterday. Dow was up by 0.98%. S&P 500 was up by 1.41%. NASDAQ was up by 1.67%. Particularly the tech giants were showing quite a bit of a significant rise. Pretty much third consecutive session, Alphabet and Amazon and Meta all rose by more than 2%, and also NVIDIA jumped by 4%. Still quite a lot of people are uncertain about what might be happening in terms of the Fed interest rate hike. Wall Street has been quite volatile as we are waiting for Chairman Powell's speech on the Federal Annual Symposium. Investors are hoping that we'll get some kind of insight to how aggressively the Fed will be raising interest rate. So far, a lot of the Fed people have been saying that the level of the increase in interest rate will continue to remain strong as long as the inflation numbers remain to be very high. As you know, the inflation number right now is at about 8% plus. It is expected to come down based on the gradual basis of normal price rise in the future. Then year-on-year number will be hitting about 5% by the end of this year, maybe 3% by end of the first quarter next year. But of course, that is a question mark that we're not sure whether that might be happening in a longer-term basis. For the time being, we're seeing futures market showing some correction by somewhere between 0.2 to 0.3%. The European market also seems to be a bit weak, but given the fact that we've been waiting for the Fed and also there might be some changes to the rate hike speed, we think the market will be not showing a further correction, but showing a reasonable, gradual rise in the future. But nevertheless, we will have to wait and see how things plays out, and also dollar plays out, as dollar been very strong with the higher interest rate environment.
Right, and the uncertainty persists here in Korea, where stocks today were a bit of a mix. The KOSPI was higher, led by the biggest companies, including Samsung, battery maker LG Energy Solution, and chipmaker SK hynix. The KOSDAQ was lower, though. There was a verbal intervention from the government that seemed also to bring the exchange rate down a bit. Tell us about the domestic market.
Yes, if you look at the overall Korean market, it seems to be quite flat. If you look at the KOSPI, it's up by 0.15%, rising to 2,481. So it's still below 2,500 territories. Based on our calculation, the fair price of the KOSPI is expected to be around 2,700. Still, it's below, and it is a discount to the book value. Also, KOSPI was down by 0.61%. Clearly, there is no particular direction that is given based on a continuation of quite weak Korean won currency. Yes, it did appreciate a bit, but nevertheless, it's still quite weak. We haven't seen this kind of exchange rate in a very long period of time, which is at well above 1,300 territories. Right now, it's at 1,333. Foreign investors, however, though, they're not majorly selling of the Korean market per se. They continue to be pretty much flat in terms of the net purchases. If you look at the KOSPI, they bought about 134 billion. KOSDAQ, they sold about 55.6 billion. Futures market, they sold about 56.3 billion. So really, that's really not that much of a trading per se. Clearly, the volume also of KOSPI remains to be quite weak, so therefore people are waiting for the direction. Of course, we'll have to wait and see how much the U.S. will be raising interest rate in the future, particularly the September 21st. Current expectation is that they will be raising by 75 basis points. That chance of that happening is about 62%, and raising by 50 basis points is the remaining 37% or so. If you look at the BOK, they have raised interest rate by 0.25% again, and hitting about 2.5%. That is above 2.25% of U.S. But after the September, that number will be crossed again. So therefore, quite a bit of uncertainty remains to be fairly high. Of course, we have to see what happens to the current account surpluses and trade surpluses. We continue to have a trade deficit due to heavy cost of the energy side, particularly the oil price, and also with the currency depreciating this much, that causes a huge increase in terms of the import cost. So clearly that causing additional inflationary pressure. So we don't see the domestic consumption picking up that aggressively in the future as long as currency remains to be this weak. But as far as export numbers are concerned, Korea having a very competitiveness in terms of the price competitiveness, we think that the export numbers should be reasonably good on a relative basis in the future.
Right, and Mr. Yu, oil prices considered a big part of the inflation and other issues we've seen, down by a couple of dollars a barrel on the possibility of Iran being able to export crude if the Iran nuclear deal is revived. West Texas Intermediate trading at about $92.50, down about 2.5%. What do you see happening with oil prices?
Yes, WTI crude did go down by 2% plus to below $93 per barrel. Pretty much backtracking the near 5% rally from the previous two sessions because of the return of the Iranian oil export. But if you look at the futures market, it is showing a bit of a rise. It is up by about 1% on WTI, and the Brent oil is also up by 0.92%. Natural gas is up by another 2.1%. Clearly, there's uncertainty about the supply and demand picture. As you know, the OPEC Plus have said that they will be reducing supply in case of a surge in Iranian oil export in order to keep the prices remain to be fairly up high. Clearly, a lot of these Middle Eastern countries were having quite a strong the overall numbers as they export all these oils. So therefore, they have a huge increase in the budget surpluses, and that allows them to spend more money in terms of expanding to the alternative energy sectors and creating additional budgets for the improvement in terms of domestic investment. All in all, we think that the oil price will be remaining at a fairly high level, well above $75 or $80 per barrel, which is still a very high number. But nevertheless, with this kind of the tight supply picture, it remains to be well above $90 per barrel. But gradually, we think that in terms of the supply and demand side, as the accelerated investment to the EV market, we think that the oil price is in a room for a weaker demand in a longer-term basis. So therefore, we think that oil price can go further down to maybe as low as below $80 per barrel to maybe $75 per barrel over the next few months. We need that kind of trend because a lot of the countries are suffering from the huge cost increase from the energy side, including European countries as well as Korea, Japan, and also Asian countries in general. Of course, the only countries that benefits from the huge oil price rise are Russia, U.S., and also the Middle Eastern countries. So we will see how this plays out. But we think that the supply and demand picture would indicate that oil price will be gradually going down in the longer-term basis.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on the program, and have a great weekend.
Thank you. You too.